investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is Friday, the 4th of November. We are well into November at this particular point, and have we had trading volatility? Wow. All right. So we're looking at patterns. So this is Technical Friday, so let's go into some of the technicals. The Dow made a new recovery high at 33,071 on Wednesday. There was an intraday spike and then a big sharp reversal. Now, this particular candle is an inverted Chapman wave Roman candle. What is that? We've had a number of these before. Let me just go to the S&P in the monthly just to show you the candle itself. Actually, we've had so many. But this is the one that's still extant. It's still important. SPX.X. There we go. This particular candle at the all-time high, 4818.62 in January in the S&P, matches many other times in the monthly candle where we've seen this kind of either at the top or a day later, where you get, I must expand that so you can see it, a red candle at a high at the end of, preferably at what's possibly the end of a move, says that if there is a trade in the next candle, now this doesn't apply to monthly, it applies to monthly, daily, weekly, doesn't matter, and it holds for a shorter period of time than the one you're looking at. So this would be a weekly, but I made it a daily chart, and I said at any point, if the S&P takes out that midpoint of this candle that starts off, it kind of gaps to the upside, has a fractional little wick, a tiny wick, plunges, has a sharp decline, and then closes halfway to to 2/3 above the low of the wick, then that's what it called a Chapman wave Roman candle. And it says if in the following session, intra-session, there's a move that holds halfway into the wick, be careful. Not only will you test the low, but you probably will take it out. Well, that's exactly what it did, and it formed yet another one. And it did the same thing again. So that to me is really important. Then I found over the years that you can get an inverted one. Look, here's a Chapman wave Roman candle. This is the month of September, February of 2018. The high was the previous month, and then you had that candle. So it's a candle that says there are a number of, this is a candle based on years of experience, cost quite a bit of money to figure this one out, but that's the candle. So when it happens at a bottom, and it's green or red actually, it says that if the price closes above the candle high, the body high, for one or two sessions, immediately afterwards, you've turned the opening and close, that would be the lower part of the body of the candle, that becomes your support level. When it's inverted at the top, it's exactly the same principle. So what we've got, let me go back to the Dow because that's what we're talking about. And the Dow says, if there is a close below the candle, in this case low, it means that in this case, the open of this particular candle of the Dow at 32,576, a close, that should be a resistance level. If it starts to close above, you'll get that same thing, that if it starts to go into the wick at about 33,770, it can hold there, you're going to retest the high of 33,071. If this candle fails and we close below Wednesday's low of 32,139, that's a very negative thing. And not only that, it'll be below the 200-period moving average. So I wanted to explain. Technical Friday, that's what I'm explaining. What I am going to tell you is that we've been long the Dow. We've got aggressively long as well, with a 3 times long. And we're staying in that position. We've taken 30% profit. We're taking profits off on the way up. but we've still kept the core position, big core position. Now what we're looking at is the 9 period is still way above the 14. That's a big positive. The MACD is still, it's the histogram starting to narrow, but the green line is still above the red line, faster moving average above the slow moving average. That's a positive. Stochastic was over 80%, and now it's under. It's at 79%. That's a negative, and the on-balance volumes turned down sharply, and that's a negative. So overall, the weight of evidence for me says there are enough technicals here to say that unless we make an arch formation, that means by Tuesday we take out the left side low of yesterday, which was 31,727 in the Dow. There's a chance that we form some kind of a rectangle here. I'll just draw it in with a bias just at this particular point of the day. This is just of the day, that we're going to work our way higher and maybe have a consolidation here. But after a peak D in the Chapman methodology, especially coming off a bottom, you've got to expect some kind of a digestive phase. Now, what's really important about this is that within the context of what we're looking at here, there are a whole bunch of things that are important. First of all, the going from 28,660 on the 13th of October to 33,071 on the 2nd of November in such a short period of time, with only, you remember my rule of 136, with only one bar rest from peak A to B, then B to C, and then C to D, is quite incredible. Coming off a low, and the torque of the stochastic was so powerful that by the time it got to leg C, which is usually where you have to hand it over, where the stochastic starts to pull back, which it kind of did, you've handed over the momentum to the MACD, the moving average convergence divergence. Even here at D, it's holding very well. So all I can say is the cyclicals, and I need to go through this right now. Look at Caterpillar. Give me a break. I mean, we're talking about recession, and say Caterpillar heavy-duty equipment all-time high was 246.69 back in June of 2021. We're trading at 228. We're less than 20 points off an all-time high. Caterpillar. That is really quite remarkable. What about, what was that was spoken about earlier on? Yeah, Boeing. I've been talking about Boeing all week. Boeing's strength, I said to subscribers, how come Caterpillar and Boeing and other deep cyclicals are doing so well? Boeing is up $3 at 159, stopping dead in leg E at the 200-period exponential moving average. Exponential moving average? The last time it was there, it did a double, whoa, look at how many times that 200-period, a technical aspect that I tell subscribers, put it on your platform. The 200-period moving average, you don't need to use it until it becomes important. Here it becomes important. The closer you get, the greater the chance. It's like a magnet. It'll just grab the price. And it did that right there. Back in July, it gets the 159.60 area, pulls back, and then it goes peak A, B, C, D. The fourth highest peak, peak D. Be careful. Wow, it goes from that high, around about 170 down to 120. Now it's come all the way back. This is Boeing. I'll be back in a moment. Basil Chapman, Dow's at 450. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
What about Boeing? Boeing has this incredible resistance in the 160 to 167 to 170 area in the weekly chart. You see, this is what I call the Chapman inside track repellent zone. You see that? I mean, just look at how many times Boeing went into this channel and couldn't break out, and then it broke down and went underneath it. And now this is the repellent zone to see if it comes back again. Talk about the repellent zone. How about this? The Dow is in leg A in the weekly chart. Friday today is the close of the week at 4 o'clock. And here we are in the resistance area, but only in leg A. The MACD has crossed positive in the weekly chart. Stochastic is improving. It's not great. It's 43%. Unbalanced volume is the one big disappointment here. And we are not yet positive in the 9-period moving average, pink, moving above the 14 to go green. That could happen next week. We'll see what happens. But look how beautifully this resistance level has been, and look how beautiful the support level has been. One of the reasons why I want to be building a position in the Dow, because I consider that I didn't have to jump into the caterpillars, etc., because the Dow is doing all the work. I'd rather have this just at the moment, the generic ETF, and at least not be sacrificing money because one particular stock falls out of bed. So that's what I'm looking at there. So the other thing that I wanted to do is to just go quickly through these. Let me just do that again because I can't remember if I've already done this. The S&P, a nice rally, filled in the gap. It's got a lot of work to do. The weekly chart doesn't look good. And what I am looking at is by next week, this big candle, it isn't Chapman Wave Roman candle, it has a characteristic, but it is, I want to see the S&P attempt to break and close for 2 out of 3 sessions above 3,800. That to me is really important. But wait a minute, the QQQ, which is third in line in the ratings here, actually I'd put it as fourth in line. I'd put the IWM into a better position than the QQQs right now. So they've just filled in the gap from yesterday's gap down. I'm always looking at patterns. Should I do this now? Yes. Sneezing. Let's just go to this right here. Look at this. Markets are made up of straight lines, up and down. That's number one. Cup formations, that's number two, or a V shape. That's the same thing, or an arch, or an inverted V. So straight line, cup, or arch. It can mix 1 and 2 and 1 and 3. If it's 1 and 2, that H pattern says you better hold that left side low, because like here, you see that H pattern took out the left side low and went much lower, call it the dreaded H, because it looks like an H, and if at a peak A or a B it fails, that's really deadly if it goes sharply below. This went to a C, the QQQ, in this particular pattern. It's holding well, and the MACD is negative, but not too bad. Stochastic's not good at all, 35. On balance, volume's just been horrible. 9-period moving average way under the 40, and that says in every market you've got your winners and losers. In every market you've got money that comes out of the losers and goes into the winners. I think the Qs right now, as an overall ETF, are in that position. Now I'm starting to see particular stocks in the QQQ, I'll get there in a moment, that are starting to improve. So the Index 100 Invesco Trust Series is lagging. The IWM, the small caps, and we've had a number of small caps over the last couple of weeks for subscribers to my opening call. We just try to grab as much as we can, and then if we're out, we're out. Now, yesterday, we got taken out of a stock that was at $3.50, 60 cents, or 80 cents. I loved it, but I couldn't take a chance because it was so low priced. It was easy for it to suddenly drop 15, 20%, and then maybe come back. So I had to put my stops in. I struggle with this. I was going to say, we had a split position. Let's take off one position and hold another because I really like it. Well, we got taken out. I was out for a while yesterday. Came back, and I'm looking, and I said, oh, geez, I love what's going on in this particular stock. It's coming back. It's taken us out, and now it's coming back. And today I wanted to dive back in. I wouldn't be able to get in. Why? Because yesterday when I was watching it, it must have been 30, maybe 40 minutes. It was stuck. It was like it was glued at that number, 3.755. And money kept pouring in. And I'm looking and I said to myself, is this an institution buying an under $5 stock or a really big investor? And I thought, oh, man, we're going to get taken out. And now what do I do? I didn't do anything. And today the stock is up 5% from the close yesterday. But it would have been in both our positions, we would have been up huge. All I can say is I like that stock. I don't want to even discuss it because this is for my subscribers. I looked at it and I thought, I haven't seen this action in ages. It was just stuck dead. It's like someone said, an institution said to their trader, their chief trader, I want that stock. I'm not prepared to pay more than, or in this case, $3.75. I want it there. And it must have been an hour. Just over and over. It didn't have a single move above or below for about 30 minutes. And it went like one fraction, like 3.754. Then 3.776. And I'm looking and I'm thinking, I haven't seen this kind of action. So I don't know, maybe I'm being misled, but that was so upsetting to be taken out. And as I say, for the subscribers, if it's a very low price, you're not going to make, I don't want you to be in the position where you have so much that if it works out fantastically, you're a multimillionaire by the end of the week, because that could also turn around and you could be broke. You've got to have it part of your portfolio in a proportion that you're satisfied with. Okay, got that. I wish I could talk about it. I don't want to talk about it because it's on my list, and that's all there is to it. Now, there's another thing that I want to talk about. Rochelle in the Tiger YouTube talks about hog. Hog has been on my list for a while, and I've been saying I would not be surprised, even though the Wall Street Journal the other day had this whole article on Harley Davidson saying what's going on, the electric hasn't worked and all that. I think that Harley Davidson, especially if it goes electric and especially if it can really increase the distance to 500-600 miles, I think that's going to be quite successful on a younger crowd. I think Harley Davidson must be doing, although the article said they weren't, I think the chart says they're doing the right thing. It made, Harley Davidson, Hog, we've been following it for subscribers. We hardly ever had it, but I lost all my notation. So from the low that was made back in 2009, peak A, B, C, D, E, a brand new A, B, C, D, E. It makes a top back in the beginning of 2014, around about 70, let's call it 72, and it plummets down and makes another peak, A, B, C. Oh, why did I say A, B, C, D? Because in the Chapman Wave methodology, for those of you who are new, we're always looking for the lowest low bar, and then we merely want to count each successively higher peak, alphabetized all the way to G, but at the fourth highest peak, like we saw in the Dow the other day, peak E is where other things can happen. Wow, what a month the other things can happen, and now it's done it again. I'll be back in a moment with Harley Davidson. Oh, whoosh, whoosh, whoosh.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Chart allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. I didn't have a chance to do this. So here's the Fed, right? Everything's going along. We're making peak Ds. Remember the fourth highest peak in the Chapman Wave? That's where you got to be careful. You saw a peak D at about 5:15 this morning a.m. and goes sideways. Remember, the rectangle formation can last a lot longer than your patience. You can pop out of it, but if you come back, you can probably go to the base and take it out. It did that, hit the 50-period moving average, and then what it does is do 2 little doji candles that it turn around at about 6:10, and it goes peak A, peak B, peak C1, C2, because it's a little double top, and then all of a sudden it spikes. I don't remember what the spike was at about 7:08 this morning. It goes to your peak D, right? That's what we're looking for. And then it makes, I have this in a different chart on the 1 minute, but I'll do it right here. Look at the symmetry. Remember, bar symmetry is what I love to look at. Look at the bar symmetry here. The left side, let me go to this level right here. I'll just draw it in. Okay, from there to there. make it a little bit bigger, and then bar symmetry. Let's see if the number of bars on the right equal to the number of bars on the left to get back to that starting point. Well, no, it takes a few more bars and then it breaks the low. So there's your arch formation. There's your bar symmetry. I would have gone to there. Instead, it took a little longer and it took it out. And where did it stop? On the 200-period moving average, the yellow line. And then what happens? Fed. Whoosh, 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 whoosh. And it spirals up. And then that cannot be an A, because that bar, you don't know if that's a low, because it keeps going. It could keep going lower. You know that it's a trough, but on the right side, there's a higher low. That makes a V-shaped turnaround. So now what you do is you can start peak A, B, C, and what does it do? It goes to a D. I had drawn in this left side, right side price time match to a particular bar because there wasn't a perfect symmetry visually. And it comes back down and it tests and it takes out the left side low of 844 this morning at 37.40. This is the E-mini we're talking about. Now you've got a peak D. It comes down to a leg B, turns around and breaks to the upside as the on-balance volume, MACD, and stochastic all turn up. It crosses positive, and what does it do? It goes green right here at 37.63. And where are we now? We're in leg C at 37.96. Is that not a fantastic, easy technical indicator? These are the tools that we teach. And at some point, I will be doing another all-day webinar where I discuss. I've been asked, would I do a live one? Yeah, I'll do a live one. We have, a live trading one. We've done it, and we've had beautiful trades within it, but I've never called it a trading one. I'm preparing now to do a live trading one because, look, these are techniques that work all the time. We've got another leg C in the 2-minute chart, and probably making a peak C as we speak. This is a technical indicator that I developed years ago. It's called the Eiffel Tower, where the price, usually after Fed speak, the price screams up in a single leg A, and then comes down and almost takes out the bottom. This didn't take out the bottom, but it looked like what I call the Eiffel Tower. A pattern looks like an uppercase A. Now, what's interesting is that the 10-minute chart has gone to a leg B. It's only at a leg B. There should be, based on this methodology, a peak C in the 10-minute chart and then a D at some point. But the green moving, even with that whippy action at 10 o'clock this morning, once it turned green, even through the Fed speak, it remained green in the 9-period moving average. And look at this. So if you, I wouldn't have done it. I didn't have, I was at a telephone meeting at this particular point, so I couldn't really do anything. But even if I was in, I would have just grabbed to get out and maybe try to get back in. But look at this. It went from the 200-period moving average of 37.55, the E-mini, all the way down to 37.11. And then it comes screaming back in the same bar. This is a 10-minute bar, and now it's in leg B. So I just wanted to go through some of these things, Technical Friday. I wanted to show you the technical aspect that can really assist. And look at the hog. Even with the gap up, the MACD is strong. The stochastic is at 93.20%. The on-balance volume here again is not acting well. This little line here on the daily chart, that's the RSI. Relative strength is good. Everything about leg D in the daily, leg D in the weekly, and a brand new possible gray leg A in the monthly. And it had a peak D top. What did I say it was at 52.06? All right. A question came in. What about XME? XME is the, where did I put it? XME, I haven't pressed the button. There it goes. SPDR, S&P SPDR Metals and Mining ETF. Made a peak D in the monthly chart, made an unusual peak G in the weekly chart back in April, up in the 65 area, plummets down to 39.83. This is what I've been talking about all year. I've been saying these double tops within $1 or penny sometimes after weeks or months or even years are amazing at the top and at the bottom. Look, 39.83 was the low back in June. And then it pops up to peak A, peak B. B is still in place because it pulled back to where? 40.76, less than $1 off the low, and now it's starting to rally. Well, look at this. This is a Chapman wave falling axe formation. What's the pattern falling axe formation? Yep, this is Technical Friday, so I do need to do it. So falling axe formation is right here. Can I get this higher? There it is. There we are. It says the price rallies strongly. Often it goes to like a D, and then it starts to pull back, and it makes lower highs and much lower lows. And then all of a sudden it finds some support, and then it starts to rally, and it takes out the declining trend line. And that becomes like a cup formation or a V-shaped formation, and you can get a 1-to-1 to the upside. Well, 49.98, it's taken out the declining trend line. I could have put an inside track there as well, a resistance area. Now it's up above it, and it's trying to tackle the peak D that was made back in October the 25th at 48.72. If there's going to be a 1-to-1, this should get to the previous high. That was that peak right there with a falling axe formation before. That was back in September the 12th at 51.42. So this is acting well, which means that I have to go to a question came in. What about the GDX? Well, the GDX has been acting horribly. The gold miners, look at this. But I've always wondered about this. How does a market know on any particular pricing to form this kind of cup formation? Well, I usually start off, can I make it a straight line? Well, I can't. And these three tests of this particular low right here in a straight line with the Chapman wave inside track propeller zone is starting to work very well. Look, here it is. How does it know? Look, the second, I can understand the first one because that's how you start your trend line. Remember, trend line is just one single line. A channel is two lines that are parallel. So this is a trend line, and it hits it exactly on the week of the 9th of September the 30th. It goes to 2152, the GDX market vectors gold miners ETF. And what does it do? It pops up, gets stalled at the 14-period moving average, holds the 9-period, the pink, and the pink becomes important. And every day we've hit the pink. Even now it's trying to hit the 14-period moving average. So the gold miners overall is just saying, it's great action intraday. If you're short, if you're long, it's just been a fantastic intraday vehicle. But overall, but wait a minute. All of a sudden, you're starting to see that you get the dreaded H pattern. So far, it's successful because it hasn't taken out the low of 21. What did I say? It was 21.52 of the 30th of September. And it's trying to form slightly higher lows. Now it has to start to form higher highs. Higher lows and higher lows, actually higher highs and higher lows. It doesn't have to necessarily be higher lows. It must take out that left side of September. So far this is improving. I'll be back in a moment to talk about gold.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. So we're looking at the GDX. You can see here's the Chapman wave inside track repellent zone, and the GDX is at 2462. It needs to climb into leg C. This is a leg C right there. It needs to climb into leg D above 2540. At 2560 to 2560 to 2610, that'll be, that's left side high of 2611. Yeah, 26. I'd say 2625. If the GDX can get to that level within the next couple of days, couple of sessions, I think it's made a nice U-turn. And the cup formation that we're talking about in the weekly chart will give credence to the fact that the technicals are slowly improving. It might be choppy, but you want to see higher highs. At this particular point, I just don't want to see the 20 close under 22. But the highs must be higher highs. I want to start counting a peak A I've got. Now I want a peak B or a leg B and then a C, and that's going to be what you need. If you're looking at gold itself, I mean, gold has had spectacular, not as spectacular as this, moves like this, but then it kind of gives it up. And one of the reasons is the DXY, the dollar, has been so strong up until now. Look at it. It made that Look, it went to a peak D. Remember the fourth highest peak in the Chapman wave? How many thousand charts have you seen at peak Ds that pull back so sharply? Then it makes a pullback, and then it starts a rally to an arch formation, takes out the left side low, but quickly goes back in, and then it makes a second cup. And this cup is now failing, and we're going to be watching it closely. Why are we watching it closely? Because if you look at the USD JPY, which is the, if you look at this is the yen, the dollar Japanese yen currency pair. It's making the pattern that I call the dreaded H. Now let me make this arch formation a little wider like this, and then show you that within it, it's got the potential to have that little, at a peak A minus if it fails, right there. And that'll be really important because, and you can see, you've had a almost doji candle 3 weeks ago, a perfect doji candle last week, and if in 2 sessions, that'll be 2 weeks, if there is a close below this low right here, from last week of 145.11, it says that this candle close of 147.47 becomes the resistance, and there's a good chance that it'll try to test the 142s, which is the 14-period moving average. So we're watching this closely, and this is an F in the monthly chart. It's only a peak C in the monthly chart of the Dow. So let's look at the EUR, which has been struggling, but it's in the same inverse pattern. EUR, USD. Oh, I've got so many questions coming up. I must get through this quickly. Yeah, this is the one that I was talking about. It almost looks the same as gold. Look, peak A, peak B in the weekly chart of the euro-dollar currency pair. If next week you can go even higher and start to tackle the high of the week of the 16th of September of 1.010, and it's trading at 0.99 right now, up just 0.018. That'll be good. There's a lot of work to be done to get to that leg D. It looks great today, but you've got to follow through. And it does have big moves, but then it gives them back. Monthly chart is still just horrible. So is the weekly, actually, but we'll see what happens there. Now, I want you to do this real quickly. HG, high-grade copper. Wow, what a strong move in copper. It went to the Chapman wave inside track repellent zone. It went to a peak D, got repelled yet again, and all of a sudden you've got a spike that says gray A, a gray A, and then an E/B. I don't want to jump to a B just yet because this is still the same move, E/B. This is still the same move because the MACD is still holding really well, and the 9-period moving average has just crossed positive. And what it was positive? Oh, yes, it's been positive for about 5 sessions. So that could be a continuous move from the D to an E, but it could be a brand new buy signal going to buy mode. I can't say that yet. So this is good. Somebody said TGB, one of the stocks that periodically we trade. Didn't have it this time, but I'd consider it actually the other day. And then I thought, copper's not doing that great. TGB is Taseko Mines. Oh, a nice move up today, 17%. Up 18 cents at 125. Still in this cup formation, still in the rectangle, trading in this rectangle band. If it can get to 136 in the next couple of days, this is at 126 right now, then the 200-period moving average for the first time in months can start to become an attractor. All right, question I got about, I need to just continue here because I want to look at bonds. James, bonds. Yep, bonds are really still struggling. You know, the Fed has said we want to have higher rates. And look, there it is as well. This is a TLT down 52 cents. You know, the TLT is holding well. The only time I will see a really strong trend change is if the pink 9-period moving averages crosses positive in the daily chart, forget about the weekly. And that'll only happen if the 100.90, oh boy, 99.50 to 100.50, that level is hit. And that's the only way I can look at it that way. Question came up right in the beginning of the show, BTU. Yeah, BTU is Peabody Energy Corporation. I followed this periodically for years. I always forget about it, and then I look and I say, oh, BTU. That's clever, BTU Energy. And it's doing very well today. It's up $3.24, up 13% at 27.08. It broke this down channel. Now it's making more of the cup formation. I suspect it's targeting the high of the 6th of October at 28.74, and that'll start leg C. Now it's building patterns to make higher highs and higher lows in this big cup formation, which is also like a bit large rectangle. And it says if there is a close above 20, what is that? 29.86. If there is a close on a weekly basis, then there's a really good chance it's going to tackle the high of the 22nd of April up there in the 33s. But at any point, if it closes under 23.80, it just stalls and continues in the sideways choppy range. So those are the parameters there. XLE, we had spoken about this yesterday. XLE, I said it's getting kind of toppy. It's got this pattern that says left side high to the right side, 93.31 back in June of 22. It pulls back sharply to the 65 level, comes back peak A, peak B. It's in leg C. This is where you start to see some kind of resistance, because if there's a powerful move and a close above, I would say 96.80, then this thing can keep going higher. But if you look at S&P Select Energy Spider Fund right now, at this particular level, yes, I will. I'll get to the XLF in a moment. Just give me a chance. Okay, look at this. Beautiful lopsided cup formation. This is what we call the gravy cup because it's kind of lopsided, but if it gets back to the high, 99.73 was a high in June of 2014. The power of this move, the stochastic's still a little weak in the monthly chart, but the MACD is good. 9 is way above the 14, and the price is way above the 9, and looks to me like it really wants to tackle. Wow. Oh, I don't know what energy price is going to be for us peasants this winter. but it looks to me like energy prices are going to go a lot higher. S&P Select Energy Spider Fund trading at 93.38 up to, if it's able to, let me just do this. Now I need to do a little bit more work on this live so that you can see what I'm looking at. I'll be back. Dow's up 536, S&P's up 60.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So remember, this was live. I spoke to you about how important peak Ds are, how important the 200-period moving averages, etc. Look what happened. Peak D in the 1 minute, in the 2-minute chart of the E-mini, peak D, and now we're pulling back. Oh, look at this. What is this? This is a 10-minute bar? Look at that red candle. Big red candle. Oh, well, that's for peak B. Okay, so let's just go back to the story. I will be back at 3 o'clock to do Tom O'Brien's show today. I'm fortunate enough to be privileged enough to be able to do that. So the XLE, this is a Chapman Wave instance restart because the daily chart, within 2 bars, it went to a new recovery high. So what I like to do in this is the only technique that I've really changed a lot, just in terms of notation, nothing else. I just continue E, F. If it gets to G, I always put G/C because very often you can get a pullback and then it goes to a D in the instant restart. So far, this is very good action in the XLE. That's looking good. Now, there are a couple of things I didn't get to. I'm going to do it right now very quickly. Let me just see. I did that. A question about where did it go? I did the dollar. Did that. No, I didn't do the tick. I haven't looked at the Chapman Wave trend gauge yet. I haven't had a chance. Let's look at that. Profile community. Okay, so those are a lot of the questions that I've got. Yes. So the question came in: are you still looking for a monthly Chuff D? Well, most importantly is I've made a big deal since 2010 that there's been a series of rotational corrections. When you get the rotational correction, it alleviates crashes. You just don't get crashes. What happens is that the money goes from one sector to another as the good sector takes a breather and the weaker sector rallies. At this particular point, we've got the Dow acting extremely strong. When I do Tom's show, I'll discuss it a little bit more, and I'll do that again Monday because we'll see what the close is today, and we'll be one day before the elections. It'll be important. But at peak D, I expected a little bit of a pullback, a little digestive phase. We've got that. Have a great rest of the day. Stay tuned. Steve Rhodes and all the gang right here. Fabulous programming. I'll be back at 3 for Tom O'Brien's show. And check out my daily newsletter.